Okay, let's go ahead and get more on the bailout plan and a look at investor reaction. For that, we're joined by Lindsay Janis, live in our London bureau. Lindsay.
Hello, Laurie. Part of the UK government's new plan is going to see it raise its stake in the Royal Bank of Scotland, or RBS. Now, in the first round of bank bailouts in October, the government took a 58% stake in that bank. Now the Treasury says it may increase it to around 70% by converting the preference shares that it bought last year into ordinary stock. Now, that would save the bank money because it would no longer have to pay the government a dividend on those preference shares. You can see its shares in RBS down 22%. Now, it comes as the bank says it may report a loss of up to $41 billion for the whole of last year. That would be the biggest ever loss by a British company. Now, the bulk of those losses are down to its crippling acquisition of ABN AMRO's investment banking assets. Now, that purchase was made just 3 months before the credit crisis began. RBS's shares, as you can see, they're just absolutely plunging there. This bank has lost 90% of its value over the past year. Now, on the flip side today, you've got shares in Barclays rising today. They had been up by as much as 19% earlier. This is one of the British banks that turned down government funding last year, and today it said its 2008 earnings will exceed analyst forecasts. It's calling its Friday's 25% slump in its share price unjustified. And HSBC is also tumbling today. You can see its shares down just about 2%, not too badly. One of its shareholders says it's going to need to sell shares to plug a substantial capital shortfall. Speculation that HSBC is going to need to raise cash has driven down its shares by 15% so far this year. But you can see the other banks also losing ground. Investors really concerned that they may be looking at more losses as well. Take a look at the main markets, though. You can see they are all rising. Fund managers we spoke with this morning say that the UK's second bailout plan in 3 months shows that they are addressing the problem. Also, Denmark today is expanding its financial rescue package by loaning its country's banks nearly $18 billion. So this government action really shoring up these main markets here. Laurie, that's a look at what's happening here in Europe. Back to you.
All right, Lindsay Janis.